Good morning, everybody, and welcome. I'm Pam Haller. I'm the Head of Marketing for Liberty IT. Welcome to our Liberty IT virtual event. I'm going to give you a few moments for a few additional faces to join us. I can hear the beeping. There we go. This morning, John Dimitropoulos, our CEO, will host two of the most exciting and innovative leaders in banking and financial services who are spearheading a digital technology revolution in Australia. Dan Chesterman and Lewis Uguina, it is a pleasure to have you here today. As we listen to our expert panel share their experiences, please can we ask you to keep your microphone on mute. Feel free to type any questions that you may have on the Zoom chat, and we'll take some of those at the end of the session. Please sit back and let Liberty IT take you inside the digital technology revolution.
A decade goes so fast. Within the last 10 years, technology's changed the way we bank, mostly connected to our phones. But by 2030, the everyday banking experience could be entirely virtual. By then, more than 2 billion people will have digital bank accounts on digital platforms. And just 20% of so-called heritage financial services firms will have survived. Some banks will be completely virtual. Facilitated by open banking, fueled by data stored and shared on the cloud, and made faster and safer by blockchain technology.
When you vote, have you ever wondered whether your ballot is actually counted? If you meet someone online, how do you know they're who they say they are? When you buy coffee that's labeled fair trade, what makes you so certain of its origin? To be sure, really sure, about any of those questions, you'd need a system where records could be stored, facts could be verified by anyone, and security is guaranteed. That way, no one could cheat the system by editing records, because everyone using the system would be watching. Systems like this are on the horizon, and the software that powers them is called a blockchain. Blockchains store information across a network of personal computers, making them not just decentralized, but distributed. This means no central company or person owns the system, yet everyone can use it and help run it. This is important because it means it's difficult for any one person to take down the network or corrupt it. The people who run the system use their computer to hold bundles of records submitted by others, known as blocks, in a chronological chain. The blockchain uses a form of math called cryptography to ensure that records can't be counterfeited or changed by anyone else. In the future, blockchains that manage and verify online data could enable us to launch companies that are entirely run by algorithms, making self-driving cars safer, help us protect our online identities, and even track the billions of devices on the Internet of Things. These innovations will change our lives forever, and it's all just beginning.
The Australian Securities Exchange, also known as the ASX, is a top 10 global exchange. Whilst other stock exchanges exist in Australia, ASX processes the largest volume of securities trading. Millions of shares worth billions of dollars are traded daily, with the ASX itself reaching a market capitalization of 16 billion Aussie dollars. ASX has been notably global in the application of the new technology to modernize financial markets, including being amongst the first to digitize trading, to dematerialize clearing and settlement, and to perform overnight futures trading. ASX is currently on a bold mission to implement digital blockchain distributed technology. Such technology is also implemented around the world in other exchanges such as Hong Kong. Deutsche Börse as well is implementing similar technology. However, ASX is taking this tech to new heights and is also applying it to new use cases. This morning, I'm delighted to host Dan Chesterman, the Group Executive for Technology and CIO for ASX, to share his insight and experience on blockchain. Dan has extensive domestic and international experience spanning more than 25 years in Australia, in Asia, in Europe, and in the US. Dan was appointed to the role back in 2021 at the ASX, an expanded role, and he's in charge of delivering technology, data solutions to meet the ever-evolving needs of ASX's clients, internal and external. He's also responsible for data centers, for distributed ledger technology, also for business solutions and connectivity business. Also accountable for infrastructure, architecture, engineering, testing, and systems integration. More notably, Dan is also a former colleague of mine from Commonwealth Bank. Good morning and welcome, Dan.
Good morning, John.
Macquarie Bank is part of Macquarie Group, which in its 52 years of existence employs today 17,000 people globally, owns thousands of businesses across the globe, trades in 36 countries, currencies, and has $737 billion under management. With a market cap of 74 billion Aussie dollars, it continues to steadily challenge the traditional big four banks for a place in the top three by market capitalization, and it's winning. Despite its very diverse set of financial solutions for corporates and consumers, Macquarie Bank currently offers one of the most frictionless, easy to bank with, everyday banking and mortgage solution for the Australian consumer, hands down. Macquarie offers world-leading and award-winning products and is a digital-only bank. Luis Uguina, the Chief Digital Officer of Macquarie Banking, has been one of the thought leaders behind the digital explosion of Macquarie Bank. He has been at the heart of the tech, vision, strategy, architecture, design, and delivery of one of Australia's finest digital offerings. Luis joined the bank in 2014 and is responsible for leading the digital transformation as well as the engineering team. Before that, Luis was the head of technology and the global head for remote channels, a new digital business for BBVA, one of the largest banks in the world. Prior to that, he was the mobility director at Santander, as well as the chief innovation technology officer at Bank Inter. Also, a former colleague of mine from Macquarie Bank. Great privilege and an honor to have you here with us this morning, Luis.
Good morning, John. How are you?
From my perspective, it really is wonderful to be talking to two of Australia's finest technology minds and two former colleagues of mine, of course. I'm John Dimitropoulos, CEO of Liberty IT. Please join me in welcoming our audience. I know people are still coming and still joining us, and some have joined us from overseas, internationally, and have braved the time zone difference. Without further ado, I'm going to kick us off with a few questions. Luis, I'm going to start with you first, if that's okay.
Perfect.
So since I've been in the industry, and believe you me, it's been coming up 30 years now, I've been hearing about the obsolescence of many things: bank books, personal checks, cash, plastic, and of course, branches, and of course, paper. Now, almost 30 years later, there are still financial institutions around the globe who still use these things, or some of these things, if not all of these things, and offer these things to clients. I know Mac Bank is a digital-only bank. Can you tell us what would it take for a bank to leave all those things behind and move into the digital era?
That's a really good question, John. So look, it's funny, as there is nothing more digital than a bank nowadays, right? So all the information, the balance you have, where you have spent the money in, everything that you do, everything that you have, every single product is just a record on a database. We are transferring trillions of dollars every night worldwide, and we are just basically sending records, here and there. The reality is, since many, many years ago, we don't send the money from one side to another of the country via Pony Express, right? So we are by nature a digital company. Every bank in the world is by nature a full digital company. What happened is we need to provide services to different generations of people and also to different generations of companies. Some people still like to receive statements on a paper. Some people love to go to the branch and speak with the branch manager and discuss about the money. So they need this personal relationship, right? And believe it or not, a large number of companies are still relying on checks and paperwork. Look, my pet insurance company, for example, sends me a check every time they are reimbursing expenses from the vet. So they are not sending me a transfer or using MPP to send real-time money. They are sending me a letter with the explanation of what they have done and with a beautiful check that I need to go to the branch, just to cash in. So the reason is they created the process in a mainframe many, many years ago. And look, at that point, we had no internet, no mobile, not many of the things that you have today, and they require time to adapt to the new customer expectations. I think that, you know, eventually everything will come, and in the same way that nowadays, more than, in our case, you know, more than 50% of the customers use digital as the main channel rather than contact center or any other. I'm sure that all those, you know, I will say is legacy from the past in terms of paper and, you know, very analog processes will disappear, and everyone and every single customer will be expecting to be doing everything through a digital channel. Still, I think that, you know, as a bank, we have something very important is we need to give people human reassurance. When you are going to be spending money on a home and you are going to be engaged with the bank for the next 25 years, 30 years, you expect that someone is going to be helping you and telling you, Luis, you are doing the right thing, right? So I'm sure that someone will be telling you, Luis, you are doing the right thing, you know, in a human-to-human interaction, probably on a digital channel. But look, I'm not expecting that we will see checks, papers, and forms disappearing probably until, you know, 2026, 2027. Not in the next couple of years for sure.
Brilliant. Thank you very much for that, Luis. That's wonderful. Dan, I'm going to show audience an image here, and I'm going to ask you a question while I'm doing that. So in May 2010, 10,000 Bitcoins were traded in exchange for 2 large pepperoni pizzas. They were valued $41.50. That was 12 years ago. Those 2 pizzas are currently worth 500 million. Bitcoin is the first known use case for blockchain. I guess at the highest level, the true motivation was the immediate and inexpensive exchanging of value between peers in the same network. Also, it was in an attempt to eliminate the third parties from transferring funds between parties. 12 years on, cryptocurrencies aside, and we see all the trading that takes place there, we're yet to see the proliferation of use cases of blockchain and distributed ledger technology in our industry. What are your thoughts on why an industry or an organization should adopt such tech?
Yeah, look, I mean, I think blockchain is inherently an sort of technology that requires a whole ecosystem, a whole industry to adopt it, to make it valuable. You know, there's not much point being on your own network, if that makes sense. It does require an ecosystem and a group of parties to all kind of co-invest and be, you know, driven towards that you know, vision of shared data and shared smart contracts. So I think that makes it inherently something that takes a little bit longer to actually implement, which is why I'd suggest, you know, we haven't seen the proliferation that we perhaps expected. It's worth thinking about the historical context of blockchain and Bitcoin in particular as well. It was originally created around 2008, 2009. And the first white paper talks about a peer-to-peer exchange mechanism, as you mentioned, John, that, you know, doesn't need central counterparties and doesn't need central banks. It was after the global financial crisis and really was an attempt to redefine, you know, with whom do we trust? Do we trust, you know, sovereign wealth? Do we trust central banks? Or could we now put our trust and faith into algorithms, technology, and, you know, shared networks? It's quite an idealistic idea, but if you look at this pizza story, and I really do feel sorry for Laszlo, who spent $500 million on a couple of pizzas. It illustrates one of the key challenges. Is Bitcoin a cheap method of exchange, or given its volatility, is it a security? Is it a speculative asset? Is it a commodity? You know, and there are other projects which are more like utilities. So I think it is it's an inherently complex technology to apply because it does require an ecosystem to move together. The benefits, and you asked the question about why should an industry, you know, actually look to do it. I think it's traditionally investing in systems that are existing within 4 walls of any one organization has got a sort of finite benefit profile. We can always, you know, get some saving out of automating processes within an organization, but most processes actually involve multiple parties. Practically everything of value in financial markets involves multiple parties. So really starting to think about system design and process design and data models that are at an industry level allows you to really unlock substantially more benefits than you can if you just consider, systems, data, and process in each separate organization as an island. It's hard to do. It takes longer, but what's interesting to note now, and I think this is the case with all the new technologies, they go through a hype cycle, and then I suppose that trough of disillusionment, and that's where the real work happens. And projects like chest replacement are an example of that, but they're by no means unique. Maersk has done some extraordinary work on a project called Trade Lens, which looks to try and make the supply chain more transparent across that industry. We've got use cases with KPMG in the building assurance solution, which is going live yesterday, actually, on our blockchain as a service platform, which will attempt to make all the materials that are used in the construction of an apartment building visible and shared with everyone that would care about that, which could include the builder, the investor, the insurance company, the government. So I think these use cases are happening, and they do take longer, but they take longer because they're harder, but it's because they are worth more in the end if you can think about that design across a whole industry rather than one organization.
It really is fantastic and revolutionary technology, and the brave who are actually entertaining at the moment are very brave, and they're pioneers for our industry. Hopefully we'll see the benefits in the years to come. I'm going to ask a question of both of you, Lewis and Dan. This morning, most of the people who attended the session are technologists. By nature, we have a creative mind and we strive for innovation. We always want to keep ahead of the competition. We always want to experiment with the next best thing. Rapid tech evolution, it needs to be balanced though with everything that we do in our industry is being regulated. It needs to be balanced with complying to regulatory bodies and ensuring that those regulations are met. In the case of your respective organizations, can you see our attempt to comply with regulation as being stifling for our innovation, or opportunity creates opportunities for us to do other things, new things and wonderful things?
Luis, would you like to go first? I think you're on mute, by the way.
Yeah, thank you. So yeah, I'll go first. So I think that compliance is obviously a complex and evolving world, and the financial industry is heavily regulated, right? But also compliance helps us on playing in a known and predictable arena with clear rules for everyone, right? So it's basically leveling the competition for all the different companies. I don't think, to be honest, that it inhibits innovation. Just the opposite, as allows us to reimagine processes that in many cases were designed, as I said before, in the 70s or the 80s. So in the, some of the KYC, AML, and many other, processes that we have are based on, the idea that we had 30, 40 years ago with no internet, no mobile, no cloud, and lots of limitations of technology if you compare with today. So just to give you an example, we just 6 months ago, we completely redesigned our new to bank experience that was based on, a lot of years of learning and experience on how to onboard the customer to the bank. And we moved from, I will say 10 minutes into less than 1 minute. And it's because at some point, what we said is, okay, regulation, compliance is producing new rules. We need to adapt to new ways of doing things. And suddenly we saw the opportunity of unlocking with, obviously, fully compliant with everything that is required in terms of KYC, AML, and all the different tests that we need to do to any new customers. We saw the opportunity of doing something revolutionary, and thanks to those changes in the regulation, we have been able to deliver something that is unbelievable, right? So I think that at some point you always have the opportunity of self-inflicting pain and says, or regulation is not allowing us to do things, or is not allowing us just to move into the public cloud or do this or do that. I think that is just the opposite. Is basically pushing the envelope on making you thinking in a different way and making you avoiding the traditional approaches of I have been doing banking or I have been doing whatever is the industry in the same way in the last 50 years, why I'm going to do something different. So for me, it's definitely a good thing, and also helps us just to be playing in a consistent space. That is also really important in terms of protecting the customers.
Banking in particular, it's heavily regulated, but I'd imagine ASX even worse, Dan.
Yeah, it's interesting to say worse, because I think, perhaps similar to Luis's answer, I think that in some ways compliance exists to protect, the consumer largely. In our world, that's the issuer and the investor. The absence of compliance actually, wouldn't be a great thing for our industry at all. It does give you a set of frameworks which allow for all the things that you do to be ultimately, safe for the end user, the consumer, or the investor. In our case, some of the ICO projects, if you like, some of them were technology, but they were really regulatory arbitrage. They were trying to create an ability to raise funds without the need for all of the requirements that go into creating an IPO. And obviously an IPO is a much more complex process than writing a technical white paper and seeking out some investors. But I would argue that that's a good thing with an IPO. All of those compliance requirements were put in place ultimately to address one, risk in some form or another. But compliance and the government's role actually, beyond just protecting, can actually enable innovation. Probably the best example I can think of that, recently it's been in India, where about 10 years ago, they implemented the Aadhaar system, which was an individual, unique identifier for every person. And that could be linked to a digital branchless bank account. And it was then used to distribute social service payments from the Indian government. So in a, period of around 18 months, they created essentially the biggest, creation of digital banking customers that the world had ever seen. And that was the biggest disruptor essentially was the regulator. So it can be the source of innovation as much as it can be also a framework that allows for protection. And I think it's sensible for us to think about the application of technology within a framework that does protect the end consumer.
Brilliant. Now, well, in my mind, regulation and complying with regulation, it's all been designed in the interest of protecting either the investor or the end user or the customer. If we look at the example of what's happening with responsible lending, for instance, that's been particularly designed to protect the consumer. So it is something that I certainly welcome, even though at times it does appear that's something that requires extra investment and more focus from organizations. Luis, I'm going to play a short video for us. You will probably remember this. This is you in Boston a few years ago. Let's listen to this.
We look at Uber and Amazon as eBay as the reference model. Most banks, you wouldn't expect that. Where does that come from?
Well, basically, if you see the banking industry, we have been a full digital business for a long time. So we're not, anymore moving money, real banknotes, in a Pony Express on the Pony Express. So, but the biggest issue is, with this full digital backend that we have, where we're moving ones and zeros, we have a quite old approach in terms of the culture and how we're doing things. So for us, being digital first means that we have the whole value chain is going to be digital.
So this was a few years ago in Boston, Red Hat Summit, at digital first, moving ones and zeros. Well, APIs, data, AI, cloud are all in the foremind of every CIO I talk to. It seems Macquarie Bank has backed the right technology, and it has been backing the right technology for years now to future-proof and leap ahead of competition. You, as in the bank, and you in particular, have certainly embraced the mantra of being bold and being a technology company which specializes in finance, not a bank. I love that. In your opinion, what makes an FSI organization and a leader in adopting new tech versus a follower?
Well, it's amazing to see myself, 5 years ago. So look, to be a leader, you need to understand the technology and how that technology can unlock the business capabilities and can improve the customer experience, right? So at the end, we are just delivering financial products. As I said before, we are a full digital company at the core. Everything is on databases, systems, containers, cloud, etc. Right? So I have been lucky to be at the forefront of the technologies since I was really, really young. And I remember back in 1997, I remember the first meeting that I had with the CEO, and what he asked me is, "Oh, Luis, do we really need to invest money on something called web?" And I said, "Well, yeah, you should. And that was the first time. But believe or not, 10 years later, 2007, the CEO of a different bank I was working at asked me, "Luis, do you really need to set up a team and invest money on something for mobile phones?" And I said, yeah, it's something that needs to be done, right? And exactly the same when we were discussing about the cloud, a few years later. I think that every single few years, there is a disruptive technology that is going to help making things happen faster, better, delivering better customer experience, and somehow protecting the customer and running, in our case, the bank in a much better way, more reliable, cheaper, and with, delivering at the end a better customer experience. That is the most important thing. And look, if you think on what happened at Macquarie 7 years ago, I remember having the conversation in 2014, end of the year in 2014, and the discussion, and you were part of the few months after that decision is, well, should we start doing containers? And, believe it or not, containers, and in the way we know today, OpenShift or Kubernetes or any other similar technology, containers back 7 years ago were like a big bet in terms of, no one in the world, and especially no banks in the world, are doing anything on the containers space. And I remember the discussion with, Richard Healy in the core banking, with some of my colleagues in technology, security, etc. And at the end, the discussion was, look, we don't know if the future is going to be, and I'm speaking again 7 years ago, right? Very, very different situation. What we said is, look, we don't know if the future is going to be private cloud, is going to be public cloud, or is going to be hybrid cloud, or any kind of cloud that we haven't yet discovered. But what we are sure is that we will be moving into some kind of cloud, right? And at that point, the decision was, well, look, if we move into the containers technology, we will be able to decide. So something that I learned when I was doing my MBA in Stanford was, a quote that the strategy teacher was telling us almost every single day is, a strategy is how to gain and maintain control of your destiny, right? And somehow what I think is every single decision that we have made at Macquarie, not only when we decided just to be, moving into a new core banking system that, you had the opportunity of doing, and this is how we met the first time. Or when we decided to move into the containers platform, when we decided just to really bet on distributed databases in order to hold all the information of the customer in real time. So every single decision has been somehow protecting ourselves from the future, right? And nowadays we are, I will say, the most advanced bank in the world in terms of public cloud technology, in the way that we are dealing with applications in the public cloud, the vision that we have for security and running the whole system or the whole bank on public cloud, right? And it's because 7 years ago, what we were discussing is not about, we are going to be doing a small test with some kind of cool technology. Is we want to protect ourselves. The future is going to be cloud. We don't know which one, but it's going to be cloud. And if we are moving into the containers world, we will be we will be bulletproof, right? And even when we made the right decision, we moved into containers back in 2015. We started with OpenShift. Now we are moving into Kubernetes, and so we have been also evolving. But in that evolution is basically seamless for us. It's not like we are going to revolutionize the whole bank. We need to understand what is this thing of containers, how the public cloud works. We have been basically evolving with technology. And I think that this is the most important thing, to be honest.
Yeah, that's awesome, Luis. I had the pleasure and opportunity to see that firsthand. Dan, I'm going to play us a little video in a minute, and it's part of my research for this webinar. I stumbled across this reference of someone we'll see in a second talking about the Australian Securities Exchange and the work you and your team are doing. Bear with me for a sec. I'll play that video. This is also from Massachusetts, MIT.
The following content is provided under a Creative Commons license.
The Australian Stock Exchange is updating their clearing and settling. They announced they're doing a blockchain project. They're doing it with digital assets, and they're using the Hyperledger blockchain, which is an IBM software, open source software. But the Australian Stock Exchange is going to put it on 3 computers, which is called 3 nodes, that they control all 3 of them. I'm just giving it, that's permission blockchains. There's nothing wrong with that. That's just how they're looking at this. Permissionless blockchains are like Bitcoin. Unknown participants, securities based on incentives, a cryptocurrency, and crypto economics.
That was Gary Gensler. He was an MIT professor back then, it's a few years ago, talking about the Australian Securities Exchange and the work your team is doing there, Dan. More notably, he's moved on to become the chair of US Securities and Exchange Commission. And what great testimonial for MIT to be talking about the leading edge, the bold work that you guys are doing. And I know some of our team is also involved in that wonderful success story that's evolving. I want your views, Dan, on what you've just heard, but also your views on around blockchain, distributed ledgers, around the resilience and performance challenges that may come.
Yeah, firstly, I think Gary Gensler made a couple of just factual errors, which is unfortunate. We're not using Hyperledger and we're not 3 nodes. It's 7 nodes across 4 data centers. But it's very true that of course you could make that sort of error because actually this whole space has evolved massively even during the life of this project. So yes. We're using the digital asset still, but VMware's ledger. We quite deliberately have made it a private permission network. And that was really because when we started the work and we spoke to our customers about their expectations in relation to data privacy, security, confidentiality, customers like Macquarie Bank or Goldman Sachs or CommSec, were not comfortable with the idea of their data being in other people's nodes, just protected by cryptography. They did actually want that segregation to be at the database level. So, what we've established in the end is a private permission network, which has a lot of the features we are seeking to use from a DLT perspective, like smart contracts and data synchronicity and an ability for a customer to know that what they're looking at is in sync with the ASX. But that this does still allow us to operate at the necessary levels of non-functional performance and the level of security and privacy that our customers expect for their financial records. What's quite exciting about what we're implementing is, in the first instance, it will perform, we'll have an application that performs the clearing and settlement functions that CHESS does today. So on day one, the uplift really from a functional perspective is limited to those things that have been included in the scope of the project. But the infrastructure is in place with nodes used by all of the clearing and settlement participants for them to start to actually build applications that handle processes between them. And in some cases, they may not have ASX as a central counterparty. So we are putting in place infrastructure which can be leveraged by our customers to perform multi-party workflows with or without ASX at the center. And in that role, what we would be is essentially providing, surety that it's on our network, that there is a degree of sequencing, but actually the opportunities for other applications are really up to the imagination of our customers.
That's quite spectacular, Dan. I know that there were a few, that technology has evolved since the video was taken, but it's quite spectacular that MIT is talking about this, and it's quite as important as Gary. So well done to you and your team for what you're doing.
Thank you.
Okay, so the question for both of you. So in my mind, if something is not done for the customer, it's not worth doing. However you perceive the customer being, whether that's an investor, whether that is a consumer, or whether that's a corporation. So tech investments that are directed at delighting the customer always yield the best rewards. and their rewards can be measured in customer satisfaction or profitability or market expansion. We've got some recent examples from your respective organizations, like with digital statements, for instance, and alerts and notifications, removing paper, as well as open banking. And of course, the consumer data right approach for sharing data between banks eventually will get us to a point where customers can move the data from one organization to another, like the telcos do. Are you able to share with us some of your thoughts on what the future holds for the tech industry, which is going to benefit the customer, beyond those examples I just mentioned?
I can start here. So, look, I'm a fan of open banking. I think that it will take some time to take off, but it will eventually do. The big challenge that we have right now is that we don't have killer applications yet, but I'm sure that they will appear. So I'm going to share with you something that is a quite remarkable example of how open data is helping the customer. So I have at home a very powerful home automation system. And probably a couple of months ago, suddenly the phone sends me a notification that says, "Hey, Luis, a couple of weeks of extreme heat are going to lead into a higher invoice for your electricity company by the end of December, right?" And I was shocked, right? What I said is, look, how is possible that Google is able to understand my ecosystem so well? And well, basically, Google is the software that I have running the whole home automation. They know the way I consume electricity with the air conditioning. They are able to connect to the weather, or what is going to be the prediction from BOM. They are able to understand, many things, right? But what I thought at that point is, well, look, this is something that the bank is the company that should be sending that, because at the end, if you imagine your life, how many times per day, or how many times, during a single day, you are having financial transactions. And obviously, they are fully embedded in our life. You go for the coffee, you take the public transport, you are paying a bill, whatever. So many times we're just using the bank in a completely transparent way. But those transactions are happening, right? So I feel, on top of being a fan of open banking, I think that the strategy of the governments on moving from open banking into open utilities and then open government, open leisure, etc., is going to open a complete new set of killer applications. And at some point, everything is going to be beautifully integrated. So I think that is really good for the customer. This idea of data transparency and being able to share your data with trusted third parties is really good. It's going to also, at some point, will spark innovation. And it's also give us, what I mean is going to give every single company a great opportunity of leveling the game. And what I'm saying, leveling the game, is imagine a huge bank and a small tiny bank, right? So how a small tiny bank is going to be able to compete with a huge bank in terms of marketing and capabilities, etc., etc. Well, with open banking and all the new open APIs that are coming, at some point, the small bank or the small company, the small fintech startup will say, look, give me your information from a third-party bank and I will basically replicate your world in this new bank, right? So something that today is complex, because changing the bank, we all know what means changing the bank, changing the direct debits, changing the bills, trying to replicate something that you have been used to for many years is a pain. So open banking and the new capabilities are going to open a completely new world of possibilities. And I strongly believe that the financial institutions, that we are at every single moment in your life, where you are somehow buying something, doing something, or spending something, even in a transparent way, like when I'm tapping my phone on the public transport, I think that we have an incredible opportunity to deliver really good customer experience and somehow delivering products that are going to be really beneficial for the customer.
Dan?
I think Luis has answered that very well. I mean, my sense is like very similar to Luis. I think these approaches around the way that we share our data, to date, I think it's been a funny exchange. In a way, we've shared our personal information almost accidentally. We leave it, in cookies and dribs and drabs around the internet, and practically everyone on this call, I'm sure, has 50 digital identities that you've got with your bank, your travel agent, the newspaper that you read, all of those sorts of things. And I do think over the next period, and it's hard to put a date on it, there'll be a little bit of reconsideration about how do we share our identity, how do we actually do that in ways that give us the ability to access the services that we want and have these delivered in a very personalized way without perhaps the kind of current exchange, which is almost imperceptible to us, but the reality is we're leaving digital fingerprints everywhere. I think that sort of balance of convenience and security with privacy is something that we'd all like to strike. And the next few years, and this will be not just technology, but about the way that regulations, compliance, and frameworks like open banking come together to enable that.
Brilliant. Lewis, I wanted to hear your thoughts on banking as a service. We heard last year, use case, Afterpay, and the work they're doing with Westpac's 10x banking as a service solution. Moving aside for a minute, the whole, buy now, pay later solution, and whether that's been in the best interest of the consumer, as well as whether it's a profitable business. I want your thoughts on banking as a service, and can you see any risks or any opportunities arising from banking as a service?
So we know banking as a service very well. We know very well because we have been providing banking as a service capabilities to a few companies in a wide label approach for many years so far. So I will say that we are experts in that world. Look, I think that as any as a service capability, and think on banking as a service, telco as a service, electricity as a service, whatever, big opportunity to provide new angles to customers. And I know a couple of examples in UK where Tesco and some other companies, they are successful. At the end, obviously, this idea of I'm going to be, putting my salary on my supermarket transaction account, it's at some points a little bit like probably pushing the boundaries on what is banking doing. But look, I feel that one of the things that banking as a platform or banking as a service or any as a service is giving you the capability of providing a completely different customer experience to customers, right? So we have at Macquarie, we have our own vision of how that customer experience should be, what is the quality of service that we need to provide, and what we need to do to delight the customers. Maybe a third-party company that is a supermarket or is a car dealer or whatever, they have a complete view of how they should be delivering this customer experience, and they may be doing an incredible job for a very particular segment of customers. What are the big challenges that we have, especially in the banking as a service, right? Not speaking about any other as a service product. Is the first one is, as we said before, we are heavily regulated, right? So what I mean is even when we are providing banking as a service to other companies, we are responsible for know your customer. We are responsible for AML. We are responsible for every single thing that, as a bank, we need to provide. And then the idea of others are providing this differential customer experience or different customer experience, but we still own many of or if not all of those areas, right? So this is the first challenge that any as a service platform, especially banking, has. And the second one is banking is a business that is extremely complex in terms of really low margins, right? And at the end, if you are doing something as a service, is because you are expecting to be profitable, right? So, and not only you, the other company that is using your platform in order to deliver a different customer experience with the same products is expecting some profit. Otherwise, we will not be doing. And this is something that every day is going to be more and more complicated, right? So if you look at Europe, the official price of the money is negative, right? So the home loans there is close to 0 or 0.1% on the variable home loan. So when you have a zero on the price of the money, or even negative, where are you getting the money from, right? And then at the end, when you are delivering as a platform, you are again expecting that both parties are going to be making money. So this is what I think is, from a technical point of view, I think that is great, and is again, providing different segments of customers a very, very tailor-made experience, because the company that obviously is using your banking as a platform or as a service, they know very well their customers. But in terms of making this business successful, you need to be able to make money at some point in time, right? And this is where I think that every day is going to be more and more complicated.
Right. Well, let's just catch our breath here for a second, and maybe I'll take us back to blockchain, Dan. Blockchain is a catalyst for change. Distributed ledgers are right at the core of the blockchain technology. But the whole idea is where not one entity owns the value in that network. And cryptocurrency, I guess, is the unit of reward when someone is providing a service into that network. For instance, validating a transaction before it's appended on a ledger. So the ownership stake, I guess, of the network is equally distributed among the peers on that network. It's not concentrated. It's not one party that owns it. Do you believe that that technology provides for a fairer and more trusted system, which protects the user or the customer better?
So yeah, look, there's a bunch in that. I mean, of course, the way that we're looking at deploying DLT, we actually don't have those sorts of incentive structures, because we'll be running the committer nodes for the ASX, CHESS replacement system. I do think over time there will be a mix of different public and private blockchains that need to interoperate. And I do see that there's something elegant about the way that in the public blockchains, you do have this sort of concept of reward for the work that you do for a network, and also gas or some sort of consumption pricing for the work that you put into the network. I think the challenge with a lot of the public blockchains historically, though, has been they've almost externalized a lot of those costs, and they come through in the form of substantial power consumption, or very, very complex or even slow performance for all the work that's being done in a distributed way. I don't think that's a completely intractable problem, and I know that there are certainly evolutions in the designs of some of the blockchains that will actually go some way towards solving some of those problems. Again, it comes back to one of these situations where sensible regulation or even incentives which create blockchains which are more aware of the impact that they have on externalities like power consumption, will be actually, I think, necessary for the industry to reach the limits that it could get to. What I do like about the concept, though, of us even in our instance where we're not using gas or mining as a way to kind of provide incentive structures, it does force the industry to, and this maybe answers a bit of the question that Jay-Z, I'm not sure if Jay-Z is still on the call, but asks about how you see data governance evolve as blockchain is implemented. If you take any transaction that happens in the financial markets, that involves multiple parties, let's just take a rights issue. A rights issue today would involve many parties, but each of them would have their own set of books and records for that transaction. They'd each encode the details that are relevant for them in their own system. And whether they actually use the same technology or the same data model is actually not enforced. So we sort of send data between us and hope that the way that we're recording and interpreting it is consistent with the message that we were trying to transmit. I think as you look at multi-party system design, it does actually force you to really think about the data model and the data rights and the data governance that should be across that data for all the parties, that that they have what they need when they need it, and that it's consistent in the way that it's actually interpreted. And so applying the system afterwards is actually the easier part than the first. The first challenge is actually getting a group of organizations to actually commit to a standard and a model and a way of interpreting. And I think that that sort of thinking, how can we actually be really efficient across multiple parties within a value chain, is one of the key things that can unlock value and help improve data governance when you're thinking about implementing these technologies.
Right. We've only got time for a couple more questions now. Luis, I'll ask you this question, and Dan. as well, of course, if you want to jump in. This is about cloud. Okay, whether you're an AWS or Google or Microsoft or whatnot, but cloud is attracting a lot of attention at the moment. Most of the CIOs I talk to, yeah, that's on the agenda, right? Why should it be on the agenda? Why? Luis, I know you touched on it a few times in your speech, but let's just focus on that.
Well, I will say it's because hope is not a strategy, right? It's something that obviously, is coming. If you're a CIO, you may think, oh, I'm going to be, to dig in my data centers, and I'm going to be better than Google, Amazon, or anyone else, right? So, two big reasons. So the first one is, and I'm not going to be speaking about this cheaper or is more expensive. So I think that this is not the discussion on the cloud. So the first one is, it will help on reducing the blast radius on anything that, in any situation, because obviously the scale that they have is massive. This is the first one. The second one is going into the public cloud automatically unlocks thousands of new capabilities that you don't have if you are working on-prem, right? So what I mean is, I go to any of my cloud providers, and immediately I have machine learning capabilities out of the box. I have self-healing architectures out of the box, elastic capabilities out of the box, etc., etc., etc. Something that obviously I can do internally. I can hire a third party that is going to be doing for me, but this is the capability that is out of the box as soon as you are moving into the cloud. And the third one is something that is what the cloud is providing in terms of being elastic and being able to instantiate 300 machines in seconds, or even moving into one machine or zero, is really speeding up the whole company. I remember 7, 8, 10 years ago, as soon as we were starting any new project, the discussion with the CIO or equivalent is, how many customers do you expect to have today, in 1 year time, and in 5 years time? Because obviously, if you're expecting a lot of customers, you need a lot of square meters on the data center, and you need a lot of electricity and air conditioning. So they are machines creating a massive amount of heat. That discussion that usually were months in terms of, I need to do the prediction, and is basically like having the crystal ball, is very difficult to understand how the customer is going to react. So months of discussions, months of creating the machines, the square meters, etc., etc. All those discussions right now are close to zero, right? I don't know how many customers I know how many customers I expect in tomorrow, but I have no idea in 1 year, and even less in 5 years. And I don't care, because if I have a lot of customers, I will really expand my capabilities on the cloud. If the product service is a complete disaster, basically I will spend zero, and I will just remove all the machines. So those are the three reasons, in my opinion, why having the cloud in every single CIO's agenda is compulsory nowadays.
Dan, any thoughts?
Yeah, I completely agree. We're looking at it particularly in areas like analytics and some of our corporate core, because you can just access the capability so much more quickly, and it does sort of improve the speed to actually value and allow it to be much more resilient. We do have a number of services though, which I really still do struggle to see how public cloud will become the model for example, where our customers put their equipment in our data center, and every single one of them have a cable of exactly the same length, so we're providing an even playing field. And that sort of thing isn't yet possible, or that sort of predictability. It is just, at the end of the day, physics. That needs to be a physical instantiation. But the cloud provider is well aware of that, and working with us in ways that they could bring then for the cloud into the data center. Where I think that's the potential for you to get some of the value that we're talking about here in terms of access to capability, scalability, and automation, but recognizing that in some cases you do have non-functional requirements just that really do prohibit you to access it in that kind of traditional public cloud way.
Okay, I'm going to take one question here from the audience here, which was about is there a future for banking in the metaverse? No investment advice, please.
Look,
It's a present.
I'm sure that there is a space for banking in the metaverse. If the metaverse at the end is a virtual representation of life, I can tell you that you will have people asking for money in exchange for goods or services, right? What I think is, this is funny. I was speaking with a colleague from the United States a couple of weeks ago, and he told me, oh, it's amazing. We are thinking on opening a virtual branch on the metaverse. And I said, what that means? And he said, oh yeah, it's a physical representation of our branch. And I said, well, look, I think that is a quite analog way of thinking on the metaverse, right? So my expectation on the metaverse in terms of how should be the customer experience is you are, in the metaverse, and at some point you need to access your money. I don't know if it's double click, triple click, or you do a double jump on the metaverse, but at some point pop-up menu appears and says, look, this is the money that you have in your bank. And here, open banking on all the capabilities that we have been discussing is where we have the opportunity to be doing something different. And at that point, in exchange for a service, for a good, for accessing whatever, you will need to pay money. So no one can think that everything in the metaverse is going to be free, and we are going to be like at the beginning of the internet times where everyone assumed that internet equals free, right? So I'm sure that it will be financial interactions, it will be a foreign exchange, and many different situations where you will need to pay a tiny amount of money or a lot of amount of money, to buy a virtual car at some point. And I think that banks, we have an opportunity, but I don't think that the opportunity is going to be, I'm going to open a, whatever is the name, bank branch in the middle of nowhere in the metaverse.
Fair enough. Dan, closing comments.
I think JP Morgan has opened, I think, what they're calling the Onyx Lounge in Decentraland. And I think that's the first major bank to have put, like real estate in one of these metaverses. So, I think I completely agree with everything Louis said. It's going to be, something that requires support from financial services.
Brilliant. Folks, that's all we have time for this today. Thank you very much both for your insights and your time this morning. It was great hosting you both. I'm going to now hand over to Pam to close us out. Thank you very much again. Thank you to our audience. Pam, over to you.
Thank you, John. Thank you all very much for joining us today. We look forward to being in touch in the coming months with our next event, which will hopefully be face-to-face over some canapes and drinks. If you have any additional questions or comments about what we've discussed today, please feel free to contact myself. And of course, don't hesitate to reach out to anyone in the Liberty IT team to talk about business or technology problems that we could help you with. And our business is growing. We're always looking for great talent. So please know our door is always open to talk about career opportunities. We would love to connect. Thank you all for joining us as our audience today, and to the Liberty team who helped stage this event, to John for sponsoring and hosting, and of course, a huge thank you to Dan and Louis. Have a wonderful day, everyone.
Cool. Cheers.
Thank you all.
Bye.